Hello and welcome back to Boni's Life, your home for deep dive analysis that cuts through the noise in the world of finance and technology. Today, we are diving headfirst into one of the most talked about, most volatile, and potentially most revolutionary assets in the digital economy, Solana. The big question on everyone's mind is, what is the true and fair value of Sol? Is it a rocket ship to the moon or a house of cards waiting to collapse? We're going to answer that today with real numbers, credible valuation models, and actionable trade setups. So buckle up because this is going to be a deep one. First, let's get a snapshot of where the market stands right now on February 25th, 2026, because the numbers are telling a fascinating story. The entire crypto market is flashing green, with a total 24-hour volume of nearly $200 billion and a global long/short ratio slightly favoring the bulls at 51.4% longs versus 48.6% shorts. But the real story is the liquidations. Over the last 24 hours, a staggering $364 million in positions have been wiped out across 103,938 traders, with over 310 million of that belonging to short sellers. The bears are getting absolutely squeezed, and that's setting the stage for some explosive price action. The largest single liquidation was an $11.3 million BTC position on Hyperliquid. This is a market that is punishing one side very hard. Now, let's zoom in on Solana. As of this recording, Sol is trading at approximately $86.04, up a very healthy 11.5% in the last 24 hours. It's outperforming Bitcoin, which is at $67,451 and up about 5.5%, and even Ethereum, which is at $2,014 and up 9%. This is classic Solana behavior, and it's something that analyst Travis Vu highlighted in his comprehensive audit of Solana, noting that Sol consistently exhibits a beta of 1.5 to 2.0 relative to Bitcoin. When the market turns bullish, Sol runs harder and faster than the majors. Its market cap is sitting just under $49 billion, with a fully diluted valuation of $53.5 billion, firmly cementing its place as the seventh largest crypto asset. But here's the sobering context. Despite today's rally, Sol is still down 70.7% from its all-time high of $293.31 set on January 19, 2025. Over the last 30 days, it's down 30.1%, and over the past year, it's down 37.9%. The 24-hour trading range has been $77.21 to $86.12, and the 7-day range is $76.56 to $86.59. This tells us we are in a recovery bounce within a larger downtrend. The question is whether this bounce has legs, or whether it's a dead cat bounce before the next leg down. That's exactly what our valuation analysis will help us determine. The derivatives market is where things get even more interesting. According to CoinGlass, we're seeing a massive $5.31 billion in open interest for Solana futures, which is a huge number that signals significant institutional and professional trader attention. The 24-hour futures trading volume is a colossal $12.36 billion, dwarfing the spot volume of just under $995 million. This tells us that the price action is being heavily driven by leverage and speculation, not organic spot buying. This is a critical distinction that every trader needs to understand. And the liquidation data confirms this. In the last 24 hours alone, $17.7 million in Solana positions have been liquidated. But here's the kicker. $16.73 million of that was short positions, while only $974,000 was longs. The market has been relentlessly punishing anyone betting against Solana in the short term. The funding rates are positive across all major exchanges, meaning longs are paying shorts to keep their positions open, which is a clear sign of strong bullish sentiment in the perpetual swaps market. This is a market on fire, but it's also a market that is dangerously over-leveraged to one side. And as legendary trader Peter Brandt has often said, when everyone is leaning the same way on the boat tends to tip. Now let's talk about what makes Solana tick at a fundamental level, because this is where the real valuation story begins. Solana is a high-performance Layer 1 blockchain that uses a unique proof-of-history consensus mechanism combined with proof-of-stake. It can theoretically process 65,000 transactions per second with fees averaging less than 1/10 of a cent. The network currently has a total supply of 621.2 million SOL, with 568.8 million in circulation. The current inflation rate is 3.99%, tapering by 15% annually until it reaches a terminal rate of 1.5%. Crucially, 67.4% of all SOL is staked, earning holders approximately 6.2% APY, and 50% of all transaction fees are permanently banned, creating a deflationary counterforce to inflation. The network's on-chain metrics are genuinely impressive. Solana processes approximately 108 million daily transactions with 4.6 million daily active users. Its DeFi ecosystem holds approximately $7.5 billion in total value locked, and the stablecoin supply on Solana has reached $16.8 billion. The network generated approximately $600 million in annualized fee revenue in 2025. These are not the numbers of a speculative toy. These are the numbers of a growing, functioning financial infrastructure. As Anatoly Yakovenko, Solana's co-founder, stated in a recent interview, the goal has always been to build a network that can handle the throughput of the Nasdaq, and the numbers are starting to reflect that ambition. To find Solana's true value, we need to strip away the short-term noise and build a valuation from the ground up. We've conducted a comprehensive analysis using 6 different valuation models: the NVT ratio, the price-to-sales multiple, Metcalfe's law, a DCF-adjusted fee model, a comparative layer 1 valuation, and an ETF flow impact model. We've projected each of these across normalized bear, base, and bull market scenarios. This isn't about predicting tomorrow's price. It's about establishing a rational, long-term framework for what SOL is actually worth. This approach is consistent with the methodology used by 21 shares in their institutional research on Solana valuation, which emphasizes multimodal convergence. Our analysis produced a wide but very telling range of values. In a normalized bear case, think a prolonged crypto winter, a major network outage, and harsh regulatory crackdowns from the SEC, we see Solana's fair value falling into a range of $42 to $58, with a weighted average of approximately $51. This is a scenario where everything that can go wrong does go wrong. It represents the flaw, the fundamental value derived from its core technology and user base even in a crisis. The NVT model gives us $42, the PS model $38, and Metcalfe's law, which accounts for the network's massive user base, gives a more optimistic $55 even in the bear case. Then we have the base case, which we consider the most probable long-term outlook. This assumes steady growth, successful network upgrades like Fire Dancer and the proposed Alpenglow consensus mechanism, and a neutral to positive regulatory environment. In this scenario, our models place Solana's fair value in the range of $85 to $115, with a weighted average of approximately $102. At today's price of around $86, we are sitting right at the bottom of this base case range. This suggests that if you believe in the long-term execution of the Solana team, the current price could be a very attractive entry point. VanEck's digital assets research team has published similar base case estimates, noting that Solana's revenue growth trajectory supports a valuation in the low triple digits. Finally, we have the bull case. This is the blue sky scenario where everything goes right. We're talking about explosive growth in DeFi and DePIN, massive institutional inflows through the newly approved ETFs, flawless network performance, and Solana capturing a significant share of the real-world asset tokenization market, which already stands at $1.1 billion on the network. In this world, our valuation models point to a fair value of $180 to $280, with a weighted average of approximately $234 per SOL. Metcalfe's law is the most bullish model here, projecting $250, driven by the assumption that daily active users could grow from 4.6 million to over 15 million in a full bull cycle. Now let's talk about what drives these scenarios, because understanding the market forces is just as important as the numbers themselves. The factors that severely impact SOL's price to the downside are network outages, which we rate as the single most damaging factor with a negative impact score of -8 out of 10. Solana has suffered multiple major outages in its history, and each one has triggered sharp sell-offs. The second major threat is a macro bear market, which we rate at -9, because SOL's high beta means it falls much harder than Bitcoin and Ethereum. The third is SEC regulation, rated at -7, as the SEC has previously suggested SOL could be classified as an unregistered security. And finally, the FTX estate unlocks, rated at -5, which represent a persistent supply overhang of approximately 609,000 SOL, unlocking monthly until January 2028. On the positive side, the factors that support and balance SOL's price include institutional adoption, which we rate at +8. Goldman Sachs has disclosed $108 million in Solana ETF holdings. Morgan Stanley has filed for its own Solana Trust, and Forward Industries has transitioned into a Solana-focused treasury company holding over 6.9 million SOL. Fee revenue growth is rated at +7, DeFi TVL growth at +7, and technical upgrades at +6. The staking yield and fee burn mechanism together provide a steady baseline of value accrual, rated at +5. As Multicoin Capital's Kyle Samani has noted, Solana's fee burn mechanism could make it one of the first Layer 1 networks to achieve net deflation at scale. Now, the ETF story is absolutely critical and deserves special attention. Spot Solana ETFs were approved and launched in October 2025 following the precedent set by Bitcoin ETFs in January 2024 and Ethereum ETFs in July 2024. The initial inflows were strong, with approximately $420 million in the first week alone. Cumulative inflows have now reached approximately $884 million across all Solana ETF products, including offerings from Franklin Templeton, Fidelity, Van Eck, and Bitwise. But here's the paradox that has confused many investors. Despite these inflows, SOL's price has fallen approximately 58% since the ETF launch. This mirrors what happened with Ethereum, which also declined after its ETF launch. The explanation is a classic sell the news event, combined with the fact that ETF daily flows represent only a tiny fraction of SOL's total trading volume. However, recent data from February 2026 shows a fascinating trend. Capital is rotating out of Bitcoin and Ethereum ETFs and into Solana ETFs, suggesting that sophisticated investors view SOL as a relative value play at these depressed levels. So, what does this all mean when we put it all together? It means that Solana is an asset of extremes. Its high beta nature is undeniable. We saw it crash 96.9% during the last bear market, from $258 to just $8, only to rally over 3,500% from its lows to a new all-time high of $293. This is not an investment for the faint of heart. The valuation ranges confirm this. The gap between the bear case of $42 and the bull case of $234 is massive, and it perfectly encapsulates both the immense opportunity and the significant risk. At today's price of $86, we are at the bottom of the base case range, which historically has been a zone of accumulation for smart money. Now, let's translate this analysis into actionable trading strategies. How you approach Solana should depend entirely on your risk tolerance and time horizon. We'll break this down into 3 distinct profiles: the long-term investor, the swing trader, and the aggressive day trader. Each strategy uses different tools, different time frames, and different risk management approaches. For the long-term investor, the strategy is straightforward: accumulate using dollar-cost averaging. Given that the current price of $86 is at the lower end of our base case valuation of $85 to $115, a DCA approach is highly prudent. This involves buying a fixed dollar amount of SOL at regular intervals, regardless of the price. Your thesis is that Solana's technology and ecosystem will continue to grow, and the network will eventually be valued closer to our bull case scenario. This is a multi-year hold, and you should be prepared to weather significant drawdowns. Key levels to watch for heavier accumulation are the support zone around $75, the psychological level of $50, which aligns with our bear case valuation, and the absolute floor around $42. A reasonable allocation would be to deploy 25% of your intended position now, another 25% at $75, and hold the remaining 50% in reserve for a potential capitulation event. For the swing trader, the game is about capturing the multi-week or multi-month swings within the broader market structure. Right now, the trend on the daily chart is showing a potential reversal after the extended downtrend from $293. A swing trader would be looking for a consolidation or a pullback to a key support level before entering a long position. The bullish setup is as follows. Enter on a confirmed retest and hold of the $80 level. Place your stop loss below the recent swing low at $75 and target the psychological resistance at $100 for the first take profit and $110 for the second, which is the upper end of our base case valuation. This gives you a risk to reward ratio of approximately 1-3, which is excellent. The bearish setup is the opposite. If the price breaks below $75 with volume, enter a short position targeting $60 as the first target and $50 as the second, with a stop loss above $82. The key indicator to watch is the 50-day moving average, which is currently acting as dynamic resistance. Finally, for the aggressive day trader, it's all about the short-term volatility and the derivatives market. The current market conditions are a scalper's paradise, and there are two primary strategies to consider. The first is the funding rate arbitrage, also known as the cash and carry trade. With funding rates strongly positive, you take a short position in the perpetual futures market while simultaneously buying the equivalent amount of SOL on the spot market. This creates a delta neutral position where your profit comes from collecting the funding payments from the longs every 8 hours. The second strategy is to play the liquidation cascades. With $5.31 billion in open interest and the market heavily skewed to the long side, a sharp downward move could trigger a cascade of long liquidations. A day trader would monitor the liquidation heat map on CoinGlass, identify major liquidation clusters, and position accordingly. For example, if there's a cluster of long liquidations at $82, a trader might enter a short position just above that level, anticipating that a break below will trigger forced selling. That pushes the price to the next cluster. Always use tight stop losses and never risk more than 1-2% of your trading capital on any single trade. So there you have it, a comprehensive data-driven look at Solana's true and fair value and how to trade it across different market conditions and strategies. The numbers don't lie. At $86, Solana sits at the bottom of its base case fair value range of $85 to $115, with a bear case floor of $42 and a bull case ceiling of $234. The institutional infrastructure is being built with ETFs now managing nearly $900 million in assets. The fundamentals are strong with 108 million daily transactions and 600 million in annual fee revenue, but the risks are real, from network outages to regulatory threats to the persistent FTX state supply overhang. Whether you're a long-term believer, a nimble swing trader, or an aggressive scalper, there are opportunities to be found. But remember, this is a high-risk, high-reward asset. Do your own research, manage your risk, and never invest more than you can afford to lose. If you found this analysis valuable, smash that like button, subscribe to Boni's Life, and hit the notification bell so you never miss an episode. Drop your SOL price predictions in the comments below, and let's get the conversation going. Until next time, stay sharp, stay informed, and stay profitable.